Welcome back. It's time now for the Word on Wall Street. Top investors watching your money. Joining me now is Amerivet Securities head of U.S. rates, Gregory Faranello. Also with us is Adam Johnson this morning. Greg, thank you so much for joining the conversation. Good to see you this morning.
Good morning, Maria.
So President Trump signed an executive order yesterday seeking White House control over independent government agencies, including the Federal Election Commission, the FCC, and the Securities and Exchange Commission, and the FTC, Federal Trade Commission. These agencies must now submit major regulations to the White House Office of Management and Budget for review before putting them in the Federal Register. The Wall Street Journal noting that the Federal Reserve's handling of interest rate policy will be exempt from this order, but will call for oversight of the Fed's other responsibilities, including regulating and supervising banks. Greg, we all know how President Trump feels about deregulation and putting new rules and regulations in place, and he is playing this out with this new executive order. Your reaction?
Sure. No, I read the executive order. I was obviously happy to, and not surprised that he carved out, with regard to the Fed, the notion of monetary policy. But if you read the executive order, it is certainly, in my opinion, within the spirit of what this president is trying to do, what he's been elected to do. He references the Constitution, the executive branch, and he is the head of the executive branch. So, even independent agencies over time, which we know under other administrations have gone off and perhaps had agendas of their own in terms of what they're trying to do relative to holistically what the government is trying to do. And that's a problem. I mean, that's a problem with moving things forward. So having oversight over, or some sort of oversight or communication with independent agencies, in my view, is not a problem. I mean, with regard to the Fed specifically, mandated by Dodd-Frank, we have a supervisory chairman. Randy Quarles was the first one. Michael Barr was the most recent one. Mr. Barr resigned when the president was elected, and he'll stay on as a Fed governor. And now the president has an opportunity to appoint a new supervisory chairman with the approval of the Senate. Yeah. Practically, I think it's fair to say that he's probably going to choose someone that aligns with him. Sure. And even if you listen to Chair Powell's testimony on the Hill recently, they seem to be aligned in terms of looking at some of these bank regulations, what makes sense and what doesn't make sense.
Yeah, but Greg, I'm reading a TD Cowen note this morning, and the analyst there says we expect a legal challenge to these orders. It is why a judge could block them in the near term in a case as the case advances to the Supreme Court on the extent of the president's power. There's a risk to financial firms from this White House directive, as we expect advocacy groups will argue the White House order invalidates rule changes that were subject to improper reviews by Team Trump.
I am of the opinion that the president is comfortable in that vein. I think he's comfortable in terms of testing the waters. I think he's also comfortable with the fact that some of what he's doing now, not just with regard to this executive order, will wind up in the courts and will play itself out. So it's going to be bumpy. Yeah. It's certainly going to be a little messy. We're trying to do a lot at the same time. But I think the president is comfortable in that vein, and I think markets and institutions need to get used to the fact that this is going to be the way forward, at least in the short term.
Yeah, we'll see if it creates litigation, years of litigation until the Supreme Court gives us clarity there. I want to talk airline stocks, Adam. Mixed this morning, with Southwest Airlines cutting 15% of its corporate workforce, including 11 senior leadership positions as part of a cost-cutting effort. CEO Bob Jordan said that the carrier is striving to build a, quote, leaner and more agile organization under its transformational plan, expected to save nearly $210 million a year. Adam, you've got cost-cutting going on in the airline industry for sure.
Yeah, you sure do. $200 million of savings this year, $300 million projected for next year. And remember, this is happening as Southwest is actually getting rid of open seating. So it's no longer going to be the cattle call that it's always been. It's going to be like every other airline where there's assigned seating. A lot of changes at Southwest. It's all an attempt to drive profitability. It's a notoriously hard business, the airlines. Delta, we've talked about my love for Delta, not just as a flying experience, but as an investor. It's such a brilliantly run airline. It's the only one I've ever owned. But the airline business is notoriously difficult. It's why Warren Buffett won't actually touch the airlines. And I think what's also curious, Maria, is the sort of sub-story that's going on here. and that is that Elliott Associates, which is an activist investor, is taking a large position in Southwest. Effectively, they have a beneficiary interest in the company. So here you have an activist investor that is forcing change and doing so quite forcefully and perhaps quite effectively. I won't buy Southwest. I'd rather own Delta. But again, that's another one of the sort of sub-stories that's happening here, activist investing.
What do you make of Bill Ackman's plans? The billionaire investor proposing a $900 million deal to increase his firm's stake in Howard Hughes Holdings. The deal would have Pershing Square Capital Management acquire 10 million newly issued shares at $90 apiece, increasing its stake to 48%. Ackman wrote on X that this would, quote, create a modern-day Berkshire Hathaway, Adam.
Fascinating concept, and there again, yet another activist investor taking a large position in a company that he wants to remake in his own image. Could it be another Berkshire Hathaway? I'm not quite sure how we get there, because Berkshire Hathaway is such a coming together of so many different companies, and what's left of Howard Hughes is much narrower. But yeah, an interesting story, and again, you know, activist investors. We have an activist president getting far more involved, right, in the daily workings of government, and we have activist investors on Wall Street. I mean, that's just a curious sort of theme of the moment.
Yeah, interesting. Gregory, any thoughts?
Yeah, sure. I mean, look, I think Adam hit the nail on the head. I mean, Bill Ackman has been around for a long time. Activism is certainly the theme of the moment. You know, I'm sure he's looking at not only his portfolio, but he's looking at his time and place in life. You look at someone like Warren Buffett, who is, you know, years ahead. And you look at the investment horizon right now. I mean, valuations across the board are fairly stretched. Yep. So it's really not necessarily, you know, going up anymore. It's trying to, you know, spread out, going a little bit horizontal. And if I had to guess, he's looking to diversify, and he's looking at the next 5, 10, 15 years. And he's also looking like at the change in this administration and where those opportunities are going to be on the short term and over the next 4 years.
That's a great point. Gregory, it's good to see you this morning. Thank you, sir.